Alright guys, welcome back to the channel. In another trading video that I wanted to share with you is slightly different. It's how we are looking at adapting our approach from what has been a very bullish market to looking to get involved with a short, and how we can adapt that and really identifying the most high probable zone of that move, of being able to get involved in an area in the market that provides us with a higher probability reversal zone where we can look to get in, get stops, tight stops, and then look to capitalize on the move. So this is the euro dollar, and as you can see on the daily, we were trending upwards. We had the nice moving averages fanning out. We was in a strong trend until we put in this consolidation zone, and very popular on this pair is nice levels of structure consolidation. It does it all the time. The euro dollar is very well known for putting in periods of structure consolidation, meaning that there are ranges where support and resistance levels are tested time and time again in that range until we break to either the upside or the downside. And just recently we had this nice little zone here. I'm just going to draw this on so you guys can see it. But we had this nice little zone here where we had resistance, support, and then finally we broke through that support level with this strong bearish momentum. And what that signified is we're likely to see this level become resistant. So what we need to do is identify that zone, and then if we're to pull back up into that zone, how can we build a case for entry that's going to put us on the right side of the market? How can we be in a high probability trading opportunity, meaning that we've got a high probability of the market going in the direction we're predicting? And then most importantly, how can we get involved? So now we've made that prediction, and now we've looked at that higher time frame, we can now look down on the trading time frame, and I'm going to drop down to the 4 hour, and I'm going to thicken this up a little bit so you guys can really clearly see what we're looking at here. So first of all, I'm going to just zoom in a bit, and we're going to bring this into picture here. And in fact, what I'm going to do is I will just make this one screen. So we'll go down to the 4 hour. You can see that 1961 level is where we're looking at that higher time frame zone, right? And you can see very clearly here that that was previous support. If we draw that arrow on there, and that's the zone that will provide the first chance entry for that high probability zone. Now, how do we get involved? Well, now we can start building a case for entry. So the first thing I'm going to do is a very popular with traders is use a Fib retracement. So I'm going to go from this most recent swing high to swing low, and you can see that we've got our 382 retracement lining up at 1941. So it's a little bit below that level, but the idea is that we start building on using more filters and more tools to add confluence and confirmation of a certain zone, trying to think like the other traders and see where and almost like a scoring system where we're identifying the highest probable zone. So the first thing is a 382. The next thing we can do is something called an equal measured move. This is very popular. You might know it as an ABCD setup, where essentially what we're doing is we're bringing on a trend line here, and what we're going to do is clone the trend line, and we're going to bring that up from the most recent pullback to that to the extension. And now what we can do is we can start drawing on this little zone here of confluence, right? Because we've got our major structure level, which is this white line. We've got the 382 retracement, which is here. We've got this equal measured move, this ABCD pattern, which is here. Let's color this in a different color so it's not confusing. Let's go for pink. So we've got 382. The next thing we can do is use an extension. Okay, so we'll bring on a Fib extension tool, because if we're looking at an extended move and where we're likely to roll over, where's that move likely to extend to? So we've got our equal measured move. The next thing we can do is bring on a extension from the low to the high, and you can see we've got our 1414 lining up perfectly there. We've also got a 127 in that zone, 1618 a little bit higher. But what we're interested in is narrowing down this zone as much as possible. Okay, so now we've got some fib confluence. The next thing we want to do is bring on another fib extension, and this is something called a fib inversion trade, where essentially you're looking for the pullback move and you're looking for an inversion, a 1618 inversion, which you can see is right in that zone, and that would be an aggressive entry on its own. So if you trade the fib inversion strategy, you know that you're just literally bringing on, waiting for the new low, confirming the directional move, waiting for this complex pullback, which is this move here, and then looking for that 1618 inversion. Then you guys are entering aggressively via a limit order on that 1618. So your orders would just be set just before the that 1618 if you're front running your orders, and your targets would be conventionally the targets are a 618 retracement. So you'd be looking at the low to the 1618 for initial targets, and your targets would be at the 618 retracement. Now some people choose to use a 618, some people shoot for a retest of the lows, some people split their position in two, so you take primary targets here, secondary targets at the low. Some people take three positions. They take targets here, targets at the low, and then they trail stops until they get stopped out to squeeze out extra profit. But the way that the reward to risk profile works on this trade setup is you essentially, it's a 2-to-1 reward to risk. Very quick way of figuring out what that is. If you don't want to calculate the pips, just use the Fib Retracement tool here, select that 50% there, and draw on another horizontal rectangle here, and you can then plonk that right on top, and that's going to be your risk profile. So your risk profile is half of your reward profile. And of course, if you're using TradingView, you can use this short position tool as well, where you can draw that on and you can look at the ratio, the risk reward ratio, and it will tell you when you've got that 2-to-1, so you can measure it that way. So I wanted to share this with you because look, this is a typical example of a trader identifying a market that is bearish. It's got some bearish movement. It's got a little pullback here, but pinpointing the exact area to get involved and building rules around that area so that you maintain consistency going forward is what's going to allow you to generate consistent profits. And that's where most traders fall down. So just having this little scoring system where you're building out confluence, and maybe you give a point for every confirmation, every point of confluence, and you use a scoring system. So you need 4 points or 5 points to enter the trade. And then it's just a case of looking at your entry signal. So if you're a Fib Inversion trader, you've got an aggressive entry. If you're a 382 trader, you're not looking at any of this anyway. You're just looking at the 382 retracement. But if we push into this kill zone, now you can say, if we push into that kill zone, I can then look for a 3-bar reversal, a doji candle. But at least you've got somewhere to look for that doji candle now, as opposed to just putting your finger in the air and trying to hope that you got in at the right place. If you start applying this to your trading, I promise you're going to have better results long term. Let me know how you got on. Let me know how you would approach this situation in the comments. And if you're interested in learning more about how to trade strategies like this, you can always check out my 5-part video series on this channel, where I teach you step by step how to trade my trend continuation strategy. Until next time, guys, take care, have a great rest of your day, and I'll see you then.